Hello friends, welcome back to Mindful Finance. Today we are talking about a different way to invest called contrarian investing. It's about doing the opposite of what most people are doing in the stock market. And we are adding some smart ideas from a wise man named Daniel Kahneman. And this is Sundar and you are watching Mindful Finance. Welcome back. So by the way, today whatever topic we are going to discuss, I'll be giving examples with some stocks name, but don't consider that as an investment advice or recommendations. It's purely for examples. But if you still want to discuss more on those stocks, please do comment and I'll try to create videos on those stocks. Let's get into the topic now. When I said Daniel Kahneman, Nobel Prize winner in economics, and he warns against quick decisions, especially in investing, where following the crowd can lead us like disastrous. So he suggests we take time to think deeper before acting. Imagine being at a food market and seeing a long queue at one stall. It's tempting to join, right? Thinking it must be the best. So this is called as fast thinking. However, Kahneman advocates for slow thinking, taking a moment to explore all other options around. Perhaps less crowded stall offers equally delicious or better food simply overlooked by many. So this concept applies to contrarian investing. While many chase after popular stocks, contrarian investors look for undervalued opportunities with strong fundamentals, not yet recognized by the market. Investing, like choosing where to eat in a busy market, should be about thoughtful decisions, not just following the crowd. By embracing Kahneman's approach, investors can find rewarding opportunities that others might miss. So this contrarian method, I'm going to split into 7 steps. I'm going to put it in a very simple way to understand and remember. So we are going to talk about 7 steps to be expert in contrarian investment. So like step 1, understanding the feelings. So let's take an example of Zomato. Is widely recognized for its food delivery service, contributing 70% to its revenue, serving as the core of its operations. However, Zomato's ventures extend beyond this, including quick commerce, which is like 24% of its business, and delivering groceries, and Hyper Pure, which supplies fresh ingredients to about 40,000 restaurants. Additionally, Zomato is nurturing Blinkit, aiming to expand its presence and profitability, and operates internationally in 23 countries, making up 10% of its income. So when considering investing in Zomato, it's crucial not to be swayed solely by public sentiment. Instead, evaluate its diverse operations, its primary service, quick commerce, ingredient sourcing, and international footprint. So this comprehensive view helps assess Zomato's overall potential for investment. Step 2. Finding the unloved. In the hunt for stock market treasures, it's essential to look beyond the obvious. Like searching for hidden shells, the most valuable finds may not be immediately apparent. Take an example of our ITC. For example, a company with diverse revenue stream. Cigarettes now represent only 37% from its revenue, down from about 57% in FY17, demonstrating a shift towards a more varied portfolio. FMCG contributes 23%, while hotels, paperboards, and packaging, and again agriculture make up 3%, 11%, and 23% of its revenue respectively in FY23. So this diversification is like a tree with branches spread wide, each branch representing a different sector, capable of withstanding economic fluctuations. Similarly, one more thing is, we can take an example of South Indian Bank. Maybe similar than its rivals, but its solid regional network is its strength. Like a small boat deftly navigating the local water. So unearthing such companies involves scrutinizing their financials and strategies to find undervalued potential. This aligns with Kahneman's slow thinking, a careful assessment leading to potentially lucrative investments that are yet to catch the mainstream. The satisfaction of this discovery can be likened to finding a rare seashell, a rewarding addition to an investor's portfolio. Step 3. really understanding. For a contrarian investor, understanding a company like Power Finance Corporation means looking where others may not. So PFC, essential to India's energy sector, is not just about the numbers, it's about recognizing the underlying potential that may not be immediately obvious to the market. So PFC has made significant moves, sanctioning 24,800 crores and disbursing 1,914 crores since August, with a strong loan book of approximately 9 lakh crores as of FY24. Its diverse loan assets include conventional generation and notable 12% in renewable energy, indicating a forward-thinking approach in a sector with growing importance. The company's Maharatna status, awarded in October 2021, and the majority stake held by the Government of India, suggest a level of stability and potential for growth that contrarian investors. The improvement in non-performing assets with a net NPA of 0.98% in H124, down from 1.27% in H123, and a decrease in NPA to 3.4% in H124 from 4.38% in H12 may not caught your every investor's eye yet. These are the details that contrarian investing is about: digging deeper, much like assessing PFC's involvement in resolving 13 NCLT projects and its strategic investment in subsidiaries like REC Limited. It's about seeing the strength in PFC's contribution to approximately 25% of India's renewable energy, a sector poised for expansion. By taking the contrarian path, an investor would see PFC not just as it is, but for the potential it holds, especially in market that might undervalue its expansive role in powering the nation's future. It's about betting on a company that, like a good friend whose worth is not immediately recognized by all, has the strength and vision to grow significantly in value over time. Step 4. Being safe. When we pick where to put our money, it's like finding a safe spot to camp. We look for a place that's safe and let us see all around. Let's talk about Gandhara Oil Refinery. So they make special oils that are always needed, no matter what's new in the market. Then the another example is our GNFC, which makes different kinds of fertilizers and chemicals. It's like a farmer growing many types of crops to safe if some fail. So GNFC offers more safety for our money because they don't just make one thing. So another thing, companies like A&G Life Sciences are not well known, but they make important medicines. Even when money is tight, people need medicine. So A&G keeps selling, right? So being safe means you choose companies that offer different things and don't just go after what's popular. They are ready for anything, just like a hiker who packs for all kinds of weather. Step 5. Waiting patiently. A patience game. Investing with patience is much like caring for a hidden part of a garden. While many chase popular sunny spots, a wise investor sees growth in the quiet, rich corners. So this means investing in less known, solid companies like Gandhara Oil Refinery, GNFC, A&G Life Sciences, which may not be famous now but have the potential to grow. Have you heard about the company name Amintan? It's a penny stock basically. So these companies are like seeds waiting to sprout. Just because they are not in the spotlight doesn't mean they won't do well. For example, GNFC in chemical sector or A&G in life sciences in healthcare could have great chances that others haven't noticed yet. So the key is to keep an eye on these stocks and be patient. So not dropping them at the first sign of trouble. Like a patient gardener knows, not all seeds grow at the same rate, right? So the wise investor understands that these companies might bloom in their own time, often away from the market. So the investor waits for their unique to show them worth. So they trust that the market will eventually see what they are seeing, and those quiet investments could become the most fruitful ones. So this patience and trust in the choices can lead to the best rewards in investing. Step 6. Keeping strong. Holding firm with our investments, especially when taking a path less followed, requires the same patience as caring for a slow growing rare plant. We must trust in our decisions, even if immediate results are not visible. Have you heard about Brahma Kamalam? It yields flower once in a year. Take Sarda Motor, an auto component maker with a solid manufacturing reputation. With the rise of electric vehicles, its long-term prospects could be significant, and patient investors might reap rewards as their values eventually realized by the market. Kaplan Point Laboratories, a pharma company with a strong presence in Latin America, may not be widely recognized, but its focused market could lead to substantial growth. A savvy investor would hold on, knowing that persistence can lead to great outcomes. Similarly, Signity Technologies, a key player in software testing, may not be a household name, but it's essential in today's digital world, foreseeing a demand increase for their services. A forward-thinking investor might stay invested, anticipating the company's growth ahead of the market. So by sticking with such stocks based on thorough research, contrarian investors can find strength in the potential of these companies, patiently waiting for the market to catch up with their value. Step 7. Always watching. Being watchful is essential in investing. Much like a sailor who keeps a lookout all times. For contrarian investors, this means constantly observing companies like Zomato, Kaplan Point Laboratories, Signity Technologies for industry shifts or policy changes that could impact their growth. With Sarda Motors, it's important to watch for trends and policy changes in auto industry, especially with the shift to electric vehicle. Then Kaplan Point Laboratories requires attention to shifts in international markets and regulations that could affect standing, particularly in less explored markets. For Signity Technologies, staying informed about tech advancements and software testing demands is key, as these factors can significantly influence company services. So active vigilance is crucial. It's not enough to invest and then sit back. We must be ready to adapt our investment strategies response to new information. This proactive stance helps contrarian investors make the most of opportunities and maintain a robust investment approach over time. The concept of contrarian investment is not different from our mindful finance investment. Our strategy is always mindfulness. Be mindful in what you are doing. Understand what you are doing. Without knowing what you are doing, it's difficult to be mindful and to be like a contrarian investor. So be at the moment, enjoy your day, and if you like this video, please subscribe, press the notification button so that you will be notified whenever I post my video. Thank you.